we've seen how candlestick formation happens. So now we're going to be going how we can mark out our support and our resistance level. So our support level is a bearish and a bullish candle. It's a bearish candle that is followed by a bullish candle. So we have to give an example on the charts. We'll give an example, we'll draw it out, then go to the charts to show you a live example. Remember, a support level is a bearish candle that is followed by a bullish candle. That is what a support level means. So this is a bearish candle, then we need to have a bullish candle. And remember what I told you, this is the opening price. Price goes down to this extent, then closes. Then we have a bearish candle here, which goes up and closes. Well, let's make this green so you guys understand the whole point. So this is it. And in Malaysian support and resistance, we always mark out the closing price. I repeat, we always mark out the closing price. We don't mark out the opening price. We mark out the closing price. And it is a bearish formation followed by a bullish formation. So we mark out the bearish formation. That is it. Let me change this to white for you guys so it doesn't confuse you. So this is it. We mark out the bearish formation of, so this is a support of the candle. This is a support. Now let's go to the live chart so that we can understand it better. Sorry, I don't really have green as, but just you understand the whole logic. So let's go. So this is a support here. We mark out the bearish candle, which is the closing price. Price close here, price opens here, then close here. So this is a bearish candle followed by a bullish candle. So we mark out the closing price. Another way to mark it out is you go through the line charts, because price always prints the closing price on the line chart. Look, that's the closing price. So that's what we're marking. So if we should go to the candlestick charts, if we should move it to the opening price, you see that we're marking nothing on the charts. You can see we're marking nothing, but that's why we always have to mark out the closing price. So this is a support. So let's mark out that support, a bearish candle followed by a bullish candle. So let's mark this out. This is a support. And if you go to the line chart, you can verify that that's a support because we're marking the closing price. Always mark the closing price. So we're looking for another support again. So this is a support, and you see that this support was used. Remember that support is a price level in the market, or there are price levels in the market whereby buyers step in to push the market upwards. And you can see the precision, exact points. Look again, another one, 2, 3. So I'm going to be showing you this is another support. Let's take this from here. This is another support. So if price come here, we can expect price to start moving up from there. But that alone does not guarantee price to move up. There are other things that are involved in this strategy for us to know to speculate price. So that's it. So let's see if we can find another one. This is a support. You see, this support was broken. We're going to be talking about that very soon. So let's move into a resistance. How do we mark out a resistance? A resistance is a bullish candle followed by a bearish candle. So that's what you have to know. This is a resistance, a bullish candle, then closes there. Let's draw the wicks, or the wick rather. A bullish candle followed by a bearish candle. And remember, while it's marking the closing price, don't forget that. Followed by a bearish candle. Let's make this red for you guys. So this is a resistance, and we always mark out the closing price. And why is this the closing price? Because the bullish candle moves upwards, then closes here, then the bearish candle moves downward, opens here, then moves downwards, closing here, and we're marking out the closing price. So the way it works is when you see a bullish candle followed by a bearish candle, that's a resistance level. And in the line chart, it looks like this, because I'm not sure I mentioned that before. In the line chart, it looks like this, and we mark out this place here. That's it, which is the closing price, because line chart only prints out the closing price. So let's go to examples. And also, our bullish pattern looks like this in the line chart as well. We call it a V shape, and this one we call it A shape. So this is our first type of SNR, which is also called support and resistance. So let's go to the line chart and let's mark out a few support and resistance level. Remember, a bullish candle followed by a bearish candle. So I've seen one. Let me zoom in for you guys. This is the first one here. We're marking out the closing price. A bullish candle followed by a bearish candle. This is what we call a resistance. And we should go to the line chart. You see, we're marking out closing price. Look, when we mark out the opening price, mark out the bearish candle instead of the bullish candle. Look, we've moved it. See, move it to the bearish candle. Look, I'm marking nothing on the line chart, so we only mark out the closing price. And remember, it's always a bullish candle followed by a bearish candle. That is what we call a support. So let me use this instead. By marking out the bullish candle, that's one. Then let's look for another example. Bullish candle here, mark it out. And you see, it was used sellers came into the market here and sold price down to this extent, to this support. So you see what I was saying? Price basically moves from resistance to support, support to resistance. That's how the market moves. Easy. That's how. So I think this is okay for you guys. Okay, let's take one more example. This is a resistance here. A bullish candle followed by a bearish candle. See, and sellers came into the market and were able to push the market down to this extent. So this is not all. This is just the beginning of this strategy, guys. So I want you guys to subscribe to my channel if you want more content like this, and tell me how I can benefit you guys. Tell me what you want to see on this channel, so let's interact with each other, because I'm looking forward to helping traders. So now we are going to be talking about the types of support and resistance. We have three types, and SNR means support and resistance. So the first type is the A-shaped key level and the V-shaped key level. They are together. The A-shaped key level, which we know how to mark now, and the V-shape, and the first type. And remember, we always mark the closing price of the candle. Always mark the closing price. So for the A-shaped key level, we mark out the closing price of the bullish candle. Then wait for price. Like if we're taking trades on chart, wait for price to come into this level and take our sales. This is for resistance. Then for the supports, we have the V-shaped key level. Then we mark our bearish candle closing price for the supports. So if price retraces, or if price goes up, continue going up, and then comes down to this level, we expect price to tap into this level, then continue pushing up. That's what we call it a support, because buyers are present there. And we list mark the closing of the bearish candle. Then another one which you guys are not really used to is the open close level or the gap level. For the open close level, it is a bearish candle followed by another bearish candle. That is our open close level. And when you see two bullish candles as well, it's a bullish candle followed by another bullish candle. We'll still go on the charts to look at this. So this is how you mark out your open close level. Mind you, like open close level can be a support level and can be a resistance level. For a bearish, it is a resistance level, And for a bullish, it is a support level. So you want to mark out the closing price of the level of the candle, sorry. So this is a bearish candle moving to the downside, and this is the closing price. So mark out the closing price, then price opens here and continues dropping, then closes here. So we want to mark out the first closing price of the bullish candle. We'll go to the chart and mark it out. Let's just go now. So we want to mark out, marking out open close, and I've just seen one. This is a resistance. This is an open close level that price tapped into. You see price tapped into this level and pushed down to this A-shaped level, which is a support. A bearish candle followed by a bullish candle. So we need to mark on that open close. Let's mark a bullish. So this is another one. Remember, a bullish candle followed by another bullish candle. Guys, you see this one was used one and the second time. So these are precise entry. This is only 4 hours though. So guys, you need to understand the logic. So it's the logic you should understand, guys, and the example too. If you understand the logic, you can understand the example. So just keep marking them. 2 candles, 2 consecutive candles. So that's it. This is another open close level. So just keep marking out the in between. I will notice I'm always marking out the closing price. See, price open here and close here. So mark this out. Mark this out because we have 2 bullish candles together. You see this here. This is a bullish candle and a bearish candle. So we can say that this is a resistance. We mark the closing price always as usual. This is a resistance, guys. So if you go to the line chart, look, let me zoom in. You're going to see we're marking out the closing price. So this is a resistance, A shape, key level. So, and you can see that price broke through it and tapped it, and we're going to be talking about that's the last type of support and resistance. So let's mark another one just to be safe. There are many, guys, many, like everywhere. So this is one, a bearish candle followed by another bearish candle. This is a resistance level that was disrespected here. And let's look for another one. So this is another one, a bearish candle followed by another bearish candle. This is open close or gap level, but this is also a resistance level. Then let's look for another one. This is a bullish candle followed by another bullish candle. We mark the closing price, and this is a support to buy from. And you can see, I think this candle tapped into this support. So this is another type. Yes, it did. Tapped into that support, then started moving up. Look at it. So tapped into it, started moving up. So that's like ways we get our entries when taking trades. So guys, I want to clarify something. In open close or gap level, we're marking out our gap level or open close level. This is why it's called open close level, is because price closes here and price closes here. That's why it's called open close level. So when we are marking out 2 bearish candle, it's called a resistance because we have 2 bearish candle. When you mark out the closing price of the candle, you're marking out a resistance. And when you're marking out the closing price of a bullish candle, when you have 2 bullish candle and you're marking out the closing price, it is called a support. So we can sell from here, this level, and we can buy from this level. Basically, the types of SNR is basically just a way of marking out your support and resistance. It's explaining the ways in which we can mark out our support and resistance. We only have 2. We only have buyers and sellers in the market. So it's only 2 ways, it's just different ways of just marking out where they are. So that's just it. So we're marking our level. And this is a little explanation here. That's why, like, sometimes you see that price, when this candle closes, you see that price opens here, then retraces here, taps this level here, then start moving to the upside, because this is a support level to buy from. Buyers are in this place. So guys, I'm going to be ending the video there because I don't want the video to be too long. So the next video is going to be about the last type of support and resistance. So make sure you like my video and comment in the comment section so we can keep this thing interactive. All right, thank you.